the dollar index falling to its lowest level since November. Let's get more of the dollar's next potential move with our Trading Nation team. And today, that is Max Wolff with 55 Capital, and Win Thin is with Borthers Harriman. Win, welcome to Trading Nation. We'll start with you. You're a currency guy. Where do you think the U.S. dollar is headed? Not the dollar index, but against, say, the euro or maybe the pound or the yen.
Yeah, obviously the talk in markets is that the Trump trade may be in trouble. Our feeling is that it's a correction. The markets right now are still a little skeptical of the Fed's tightening intentions, and we saw that reaction after the FOMC yesterday. But this is a correction within, I believe, a dollar bull move that's still alive and kicking. It is.
So you still remain bullish of the U.S. dollar, Win?
Yeah, we're bullish on the U.S. economy. Even though Mr. Trump has not really given
But they're different things, are they not? I mean, the economy and the dollar can sometimes go in opposite directions.
Possibly, but our view is that the driver really right now is still the U.S. interest rates. We're very bullish on the U.S. dollar. There's stimulus in the pipeline. Inflation is going up. We take the Fed at their word. They're going to hike 3 times at least this year, maybe even more. That's simply bullish for the dollar. Everywhere else, the ECB, BOJ, Bank of England, they're all easing or in easing mode. And so there's monetary policy differences is really very bullish for the dollar.
Okay, Max Wolff, I'll ask it a different way. Do you believe 2017 will be the year for the first time in, 15+ years, where the euro and the U.S. dollar trade 1-to-1?
It's possible that will happen. We're not constructive of the dollar, so we agree that the monetary policy side of the equation looks good for the dollar, but we think the global sort of instability and the Trump trade is actually negative for the dollar. Looks to us like the world is moving in a sort of protectionist and nationalist direction. And in that environment, it's not good to have a strong currency. People don't want to have a strong currency, and even if they do, they may not get it. So,
but couldn't that also then flip it, bring capital and buyers into the U.S. dollar?
Yeah, I think we've seen that already, though. I think most of that's already done. And I think it's a global economy. So I think part of the weird thing that's happened here, which we don't think is so great for the dollar, is that there's been a lot of folks buying into the U.S. market, American and international, who sort of feel like the United States is the place to go weather the storm if the United States is going to be narrow and selfish and change the globalization trade. We think that it's much better to not be narrow and selfish and change the globalization trade. Once you do that, all bets are off. And a simple experiment illustrates where we get this idea. If you're the top deck in a deck of cards, and I shuffle the deck of cards, you will end up in a lower position 51 of 52 times. Those kind of odds, we don't feel comfortable betting against.
All right, Max Wolff, interesting analogy there. Win Thin, we appreciate your views. You're bullish on the dollar. Thank you both very much. For more Trading Nation, go to our website, tradingnation.cnbc.com.
For an entry into an upside breakout, some traders use buy-stop limit orders placed above a resistance level. Unlike regular buy stop limits turn into limit orders to buy when triggered, not market orders. Thus, if a stock closes below the stop price one day and then opens far above the limit price, the trader will not buy the stock.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.